If you have money at Fidelity and it's sitting inside a brokerage account, chances are you received a 1099 this year reporting the interest that you received from your money market account or money market fund at Fidelity. Fidelity has two default money market funds, and those funds do pay a great rate of interest. But where I've seen people go wrong is not realizing that part of that interest could potentially be exempt from state income tax. And if you live in a state where you're subject to state income tax, unbeknownst to you, you could be paying additional state tax on that income because you're not aware of this potential opportunity that exists to exempt this income from state income tax. Well, in this video, I'm going to talk more about that and how you can find out if your fund you're invested in inside of your Fidelity account is exempt from paying state income tax. So as I said before, anyone that has a taxable brokerage account with Fidelity, Fidelity has a few different money market funds that are set up as the default option. And one of those funds is the Fidelity Government Money Market Fund, SPAXX. And currently we can see here it has a 7-day yield of 3.99%. And over the prior year, it actually was paying even more interest. One of the next options is the Fidelity Treasury Money Market Fund, FCFXX, pays a similar yield. But why I'm recording this video is because you might not be aware, as I was saying earlier, that part of the interest that comes from these funds is potentially not subject to state income tax. So anytime you're receiving income from treasuries, that's treasury bonds or funds, mutual funds, or money market funds that invest in treasuries, you are exempt from paying state income tax. So if you live in a state where I live in, like Connecticut, where we have the very high state income tax, our highest state income tax rate is 6.99%, it's possible that if you receive, let's say, 4% a year from a treasury bond, you would be exempt from paying that maximum of 6.99% tax on the interest from that treasury bond. But if you're not aware of that and you report that on your income tax, you might be paying tax on that treasury bond or that treasury bond fund because you're not aware of this exemption. And anytime you own treasury bonds individually, it's usually pretty clear on your 1099 if that bond is going to be exempt from state income tax. So I have here a 1099 from one of my accounts with Fidelity for the last year. So we can see here, you look up your 1099 with Fidelity, and it says that I received $366 of ordinary income dividends, okay? And if we scroll further down to the 2024 interest income, this is where if you were getting interest that was exempt from U.S. Treasury bonds, it would say here, interest on U.S. savings bonds and Treasury obligations. Now, it doesn't say anything there. Now, if we scroll further down, you can see on the 1099 where this income came from. Now, this account that I have, I primarily have it at Fidelity because of the fact that it's earning interest in the default money market option, the Fidelity Government Money Market option, which is one of the three money market default options. They are the Fidelity Government Money Market, as I showed earlier, the Fidelity Treasury Money Market, and then F-Cash, which I don't believe any of that fund is invested in treasuries. So it's showing here the dividends that I received for the year, but it's not saying anything about these being exempt from state income tax because of the fact that they are partially invested in treasuries. So how do you find that information at? Well, Fidelity has a supplemental form. And this form is the 2024 percentage of income from U.S. government securities. And if we scroll down to the first page, we can see that it has a number of funds listed. So for example, the 30% allocation fund is the first fund listed. Here's the symbol. That fund pays, of its total income that the fund paid, 38.62% of that fund came from U.S. Treasury bonds. So we can see here that some funds have very little. On the first page, some have up to 60%. This Fidelity Flex Government Money Market Fund. But why I'm recording this video are for people that are invested in the default money market options of the Fidelity Government Money Market Securities or the Fidelity Treasury Money Market. So if we go to the second page, we'll find the first fund that I mentioned, the Fidelity Government Money Market Fund. Now it says here all classes because there are other share classes other than SPAXX. So it says here that 55.09% of the interest that was paid for that fund is exempt from treasuries. Now, why that's important, because it depends on your state where you file your state income tax. If you are in a state with state income tax, most states do require that at least 50% of the interest from the fund must come from treasuries for it to be exempt from state income tax. So if we go back to the 1099, we can see here that of the $366 of dividends that I received from this fund, 55.09% of it is not subject to state income tax. So when you file your taxes, you would not be reporting all of that as income subject to state income tax. So if we scroll down, we find then the second default money market option in Fidelity, and that's the Fidelity Treasury Money Market Fund. And we can see that with that fund, that has roughly 50%, 50.56% as well of the fund that's coming from U.S. government securities. So if you're not aware of this and you didn't realize this existed, you get your 1099, you do the right thing, you use TurboTax or you give it to your accountant. If they don't realize that some of the interest you got from your money market fund or from your mutual fund in general was from U.S. Treasuries and you're in a state with state income tax, you shouldn't be paying tax on that. So I bring this up because there's a lot of people that aren't aware of this, and you need to be putting this on your taxes and make sure you're not unnecessarily paying tax on this income. If you've already filed your taxes and it's enough of a savings to you, it could be worth filing an amended tax return, or at least you know going forward, and that way you're not paying tax on this money if you're not supposed to. I hope that you found this episode helpful, and if you have, please subscribe to my channel for more interesting videos on how you can improve your investments and keep more of your hard-earned money.